Good evening. Welcome to my midweek recap here for the S&P 500. Plan ahead for Thursday and Friday. I've already taken a few trades here in the S&P 500 to go over. First of all, I did take a couple of support trades, which in hindsight was not a good idea. Bears obviously have momentum and will continue trading as such until something changes. First of all, on Monday, got into 20 April 280 calls here at 81. Trailed those out down here at 68. Put in a brand new low. I shorted the next pop here in the 29 March 270 puts in at 296, half off out at 356, the other half trailed me out at 337. Good trade there. Tuesday, ended up taking a couple of trades here early in the morning. First of all, took a breakdown trade in the 270 puts at 160, trailed me out up here at 152 once it broke back above VWAP. Now I saw sellers on the tape at the previous high, so I got in 271 puts at 162. Half of those took off at 177 once it looked like support at VWAP. The other half trailed me out here at 173. Later on in the day was another potential breakdown trade. Looked like it was going to be another dead cat bounce and a break below. 270 puts at 171, out at 156. Later on in the day, price action broke above VWAP, put in an inside day. Looked like it was a nice setup for a bullish return to the trend. So I took a swing trade in 20 April, 281 calls here at 71 cents. Those actually did not work out, and I did close those here later in the day today. After the Fed information came out, price action looked very strong and looked like it was going to continue to confirm my bias. Once it rolled over, hit these blue and yellow lines, which are the 8 and 21 EMA on a daily time frame, price action sold off pretty hard, and a lot of volatility came into the S&P. So I did not close out for profit, as these did go up to about 84 cents or so, so it was about a 20% gain. I just was greedy, had a much higher hopes for that and a better plan. They just did not work out. So took my loss there, and will look for better opportunities on Thursday and Friday. Now here to my notes. As I said, looks like the bears do have control at the moment. Price action has broken through the apex of this triangle, which I continue to mention in some of my videos, and has now confirmed there is resistance. Even though there was news it should have been bullish for the markets, the reaction is what is ultimately going to make or break us as traders. So price action came up, tested the apex, the 821, rejected, and came back down. Now if it breaks below 270, I will look for 270 puts below. If it opens up and pushes up to the 8 and 21, I will look for puts, 272.5 puts here at that resistance. Profit target for the 272 puts will be 270. A breakdown below 270, I will look for a continued move down here to at least this 268.75 area from Monday. If that fails, most likely it will. There's not a whole lot of volume there. Stops are going to be just below there. I will look for a profit target down here around this 265 level, which is simply the low of this previous dip. If that fails, price action comes down, chops around, consolidates, and then breaks down below. Next price target is going to be the 200 SMA, which is 258. Now, those are the only significant levels that I can see here on the daily time frame below price action. So if it starts to run down through there, having no legitimate supports, could run down there pretty quick. So I'm looking to be bearish here on Thursday and Friday for the S&P 500. This will be my trade plan. Have a good evening and good luck.